Hello, guys. Decided to cut it short because that solo can go on for at least 2 minutes, I believe. But I really like that song, I bring it back once in a while. You guys may have noticed. But how we doing tonight? All right, did everybody perform today? How we feeling? I know these last 2 days, I don't know about you guys, but they've been a little bit higher resistance, right? Smaller range, inside day to day. So, for most people, especially with less experience or just in general, to be honest, they can be harder to navigate. But when you have a clear system, when you have a clear set of mechanical rules that define how you trade, then all of that bullshit goes away. So, we'll look at it in detail, but hopefully, you guys did good. Can I get a quick confirmation that you guys can hear me? Yes and no. Paper trail, Nate's nailed some, live trades break even ish. Fair enough. Awesome. Awesome. All right. Well, just starting on the daily chart, right? We can definitely tell. Inside day, so we won't be needing our previous day high and low, definitely, because we've just traded within those. I don't remember who it was. Was it you, Nico, that mentioned that I did not have BADJ set? Thank you. It has now been on. And for those of you that followed the conversation, it did retrace inside the bullish fair value gap, just not inside the bearish fair value gap, just in case you guys were following that conversation. But for today, pretty straightforward stuff in terms of structure for me. I'm going to be pretty honest here. At the open, we went high and low and high and low. This is bullshit for me, right? And you can name it whatever you want. You can name it bullshit. You can name it blah, blah, blah. We don't care. That's the truth. I frame all of this as accumulation, right? We are going back and forth. We are accumulating. And then we have an energetic price move, right? To the upside, taking out liquidity. London high, Asia high. We have a London framework. This is 9:30, as you can see. We took out London high. We have an extremely high probability of reaching London low. And at this point in time, you can frame this as accumulation with manipulation. I'm thinking of using these boxes. You guys tell me what you think, but I feel like it could be a little bit clearer for people, right? Manipulation starts, we don't care when it starts. That's the truth. Just like the accumulation. You never need to draw these with any sort of precision, sorry. What actually matters is when the manipulation ends and the distribution starts. And you see we have a very, very clear signal at this point in time with the SMT that was formed right at the just before the open, actually. What was the news again? Let me go check here. So the news was consumer sentiment. That's what it was. So we had 10 a.m. news. I personally started trading before because we had our Judas swing just pre 9:30. So usually you'd want to see something for 9:30. But in this case, we already had a Judas swing made with SMT. So for me, I started trading at 9:30. This is a little more advanced. This is where I stray from my rules. That's the truth. So I'm going to show you guys the trade that I personally took today. And I'm going to showcase the trade that any single Rise model trader should trade, right? Truth is, I get bored sometimes and I like to deviate a little bit. I don't deviate much, right? But sometimes I like to say, oh, well, today looks clean, so I'm going to start trading at 9:30, just before the news. Since the news is not a very high impact, if you guys are Rise Statistics users, you can definitely see that consumer sentiment is not a very volatile news, statistically speaking. I also said we had an inside day, but it's important to notice that on ES, we took out previous day high. So we have even more important SMT at those highs all throughout the day. So for me, it was a very clear short at the open. But once these levels are met down here, right? And more importantly, current low of day, which in this case is Asia low, you have SMT at this area as well. Is it fair to say that following this point, you can now look for longs? Yes. 100%. So truth is, both sides were offered today. We don't get that chance every single day, but today you would have had an opportunity to trade the short, which was the first stage of distribution. When we have an inside day, we don't really have a distribution. That's how I see it. We're just going to do back and forth, right? And that's exactly what we did today. But you had clear frameworks at each extremity to guide you throughout. We're going to go down to the 1 minute now and actually see those frameworks in action. So let me actually remove those little things right there. So as you guys can see right here, 928, is where we saw Judas swing with SMT. So for me, I counted that as part as 930, started trading at 930, and you'll see from this range that we formed a breaker block. I'm gonna, by the way, NJ, at the end of this, let's go back over breakers. Or you know what? Let's do it right now, right? Because breaker blocks are a very complicated pattern for most people, right? So what you need is a point A, then you need a point B, and then you need a manipulation and a break, right? That's the easiest way to define it. You have point A, you have point B, then you have a break of one side, which I like to call point C, and then we have a break of the other side. Now, these points are swing points, right? So we're looking for swings in structure. A swing point is, if you're familiar with the term pivots, it's just a pivot with a strength of 1, which means that we have one candle. For example, for a swing high, we have one candle where to the left is lower, the high of the candle to the left is lower, and the high of the candle to the right is lower. For a swing low, it's the same thing, but we're looking at higher. So that low of the candle to the right is higher, the low of the candle to the left is higher. So these form our points that we're looking for. So when we're looking for this pattern, we need to identify a swing low into a swing high, then a break of that point, which forms our C point, followed by a break of that swing high, which forms our pattern. This is for bullish breaker. For bearish breaker, it's just the opposite. So you have a swing high into a swing low, A to B, into a manipulation above that initial swing point. This is your C, and then a break back below, which creates your breaker block. So just to have a little refresher, I like to mention them once in a while, right? And I am going to add those to the resources. Someone please remind me at the end of this, if you guys can remember, so that I can add it to the resources and actually have people follow along. But if we look right here, we have a beautiful bearish breaker block that was formed from that break. And if we move forward, you'll see we have this overlapping fair value gap, which just gives you a very straightforward entry right here, as you can see from this box. Now, 3PD array stop loss rule here, you have inversion fair value gap. You have a tiny little inversion fair value gap here, but it got invalidated, but you have this little guy. So technically, your stop shouldn't be here. It should be all the way up here, because your third PD array is this inversion fair value gap. For me, I did not want to see price. This is where I say I deviate from the rules, right? The 3PD array stop loss rule is great, 100%. 98% of the time, it is my stop loss. And then sometimes when I try and play it more aggressive, you'll see that I place a stop based on the fact that, hey, we should not return to the 930 open. We expanded right away. I want to see this fair value gap hold. So since that fair value gap was of bigger importance to me, I used it as a stop loss. I did not even look to the left, to be honest. Since it's a pretty large fair value gap, I use quarters. Is that valid for you? For sure. I prefer to split it in two. So basically, when I bring my quarters, the midpoint, I treat both as one fair value gap, and those quarters are the midpoints of said fair value gaps. Truth is, when you expand at 930, you're often just going to consolidate for a little bit, usually a lot less time than what we saw today, but then I wanted to see that fair value gap hold to push us lower to our lower objectives, right? Why? Because as always, you guys know, statistical frameworks, right? It's the same thing over and over again. I mean, I don't even know what to say anymore, right? You're confused, you're unprofitable, trade every single London framework with a unicorn. There you go. You're not going to have as many trades as allowing yourself to trade a lot more frameworks, right? Because you're only going to have trades when there's a London framework. But you're going to be profitable every single month consistently. And I'm saying this based on the last 3 years. So I know that off the last 3 years, if you traded unicorns with the London framework, you'd be profitable. So, I mean, for you guys that are unprofitable, this is a good way to just bring money in the bank to fund your learning experience. But just overall, right, this fair value gap I wanted to see hold. And it took a while. I did hold through all this bullshit because as you can see, just to the daily open, it was not enough risk to reward. Even all the way down here, so close, yet it was not enough risk to reward. And I was very confident in that London low objective. Now you might see that my standard deviations are plotted here using the bodies. Initially, this morning, I had the full range, right? So I was looking at London low as my target objective. And then once I saw the SMT, fully out of this trade. But if we use the bodies here, I just thought it was very nice to notice that the 4 standard deviations here pretty much is the low of day by 2 ticks. Yeah, by 2 ticks or 3 ticks actually. Pretty interested. What is London framework? Just want to be sure. Is it a breach of London high or low and opposite target? Yes, breach time frame is from 5 to 9:30. So from 5 to 9:30, you want one side to be taken and the other side to remain open. And then after 9:30, you're going to be looking for that framework to be targeted. If you want to see the stats, NJ, you have race statistics, right? You go to the ranges analysis, you go to the London session, and if you go to the raids tab, you'll be able to filter based on time. So for example, I like to filter and say, okay, well, what if I force a raid? So for example, I'll force the fact you have that little checkbox, right? Force raid. So you're going to force raid 5 to 9:30 on one of the two extremes. So for example, on the low, and look at the probabilities for the high, and more importantly, the time displacement through it. What's your working definition of a London framework? That is what I just defined, right? You could determine in the first 15 minutes you mentioned yesterday and decide whether that's what you're working with. Yes, 100%, right? A London framework, I know that before 9:30. Right? As soon as this high is taken, if we leave the low open, that's my target at 9:30. Why? Because that's over 70% every single day. Some days even more, right? So I'm only interested in this. And knowing my knowledge about price, the daily structure confirms my idea, right? Accumulation, manipulation higher, looking to distribute lower. Then of course, inside day, we had a double distribution pretty much. But this is everything I need for a very high probability trade. I have intraday structure confirming my idea to go lower, liquidity targets, dynamic session frameworks. You're good, Peacock. Don't worry. What do you mean with London framework? Well, I mean, all you guys' questions were about the London framework. Hopefully I answered it. If not, I went really in depth and I also shared the data behind it. And you'll find it on YouTube. You can just search up price action review with DTT. And you'll see I did a call with the DTT community with Nine. And I went in depth and I was on Rice statistics as well. There is a little audio lag where I think there's like 10 minutes of audio missing in the whole hour, but still a lot of value defined. Do you use daily bias? Always, always. Confirmed by daily structure. For example, today my daily bias would have been previous day high. But at the point that it got taken, right, because I was bullish, at the point that it got taken, after that point, I have SMT on NASDAQ and I can then look to short. Because of my daily structure, I was going to be, well, every short is an expansion, every long is a retracement. That is how I use daily bias. I don't limit what direction I can trade. I just know how I'm going to engage. So I'm going to have different targets. So for example, if our structure told me that we were going to have a bullish day, so we accumulated, we manipulated lower, expanded higher, and now we dropped at the open. Well, I'm going to see this as an opportunity to buy instead of look to continue shorting, because my structure tells me that longs are going to be expansion and shorts are retracement. Do you understand what I'm saying here, Errol? Yes, was just so NQ today. She did my PM plan for NQ. That's unfortunate. Yes, sir, Errol. See, and not a lot of people talk about stuff like this, but the truth is, anyone who just studies their charts can find it. I studied charts for a long time. A lot of charts. I have over 10,000 manual backtests done and different studies where I would go and I would backtest the last year and look at the structure of the days and I would categorize them, group them based on the day of the week. Like I did a lot of shit manually before I learned how to code. Right? So that type of stuff just gives you an eye for these things. Sometimes they're pretty hard to put into words. That's the truth, right? I'm not a teacher at the base. I started teaching to help people that were close to me at the time, right? IRL people, and I took on a few outside students as well. But truth is, I don't want to be a teacher, really. Right? I like doing these because here I'm just sharing my insight. I'm sharing what I use every single day. I don't regard this as teaching. I regard it as mentoring, right? I'm giving you guys a free outlook in which you can directly ask a trader who does this every day how to succeed. That's the easiest way I can put it, right? And I mean, you guys are just awesome as well. And these reviews I would need to do myself. These are my journal, and now they're recorded. And 5 years from now, I'm gonna look at the PA reviews from late 2023, and I'm gonna be really fucking happy seeing that and seeing my progress and I don't know, my consistency through time, right? Pretty cool there. Yeah, a little rant right there. You guys know me. Sometimes I get started. Ollie has neural network machine learning, Ollie. Yes, sir. Yes, sir. I'm never putting a chip in my brain, though. All that to say, this short was pretty shit. The targets were great. It was aggressive. Sometimes I like to stray from it. You guys should not focus on this short, right? Because this short is an aggressive one. It's the one that you don't mind missing. But after these targets are met, and moreover, we have SMT at these levels, this is just a perfect opportunity. Sorry, I just want this guy a little more zoomed in, to look for a long. Now, of course, it would have been better if we formed a breaker right at the low of this, but I mean, you can't always have everything, right? And you formed a beautiful breaker. Just to go back over the structure here, swing low, swing high, broke the low, broke the high. This is now a breaker block. You don't have an inversion fair value gap to give you an entry here, but you have a beautiful fair value gap right here. It's a tiny little guy that would have given you an entry just 2.5 minutes later, approximately. You have the fair value gap below, the inversion fair value gap, and this fair value gap to give you a nice 3 PDRA stop loss rule. Pretty tight guy right there. And as you guys can see from the result, very good trade. Should the break be with wick okay or body close? I personally use wick. Now, a lot of people are talking about you need to see a body close above it. Okay, well, you would not have entered here. Okay, maybe you would have had a better entry on a lower unicorn, whatever. Okay, but I don't like requiring things that are so variable, right? Because all of my rules are based on real life, right? They're not based on what some mentor said. Yes, of course, I learned this pattern from ICT, and I'll be grateful for him for showcasing this pattern. But I have refined it, and I have gotten the statistics behind it to be able to trust it. And when I tell you guys we don't care about the close, I'm telling you guys because I have studied it for the last years. And I can tell you that the close is not worth it. Will you have a better win rate only taking breaker blocks that close above it? Yes. Is it worth it? No. It's like a 3% difference, and you're losing out on a lot of return because you're not taking breaker blocks that aren't closing above it. Wait, what was your entry for this second trade? The gap? Yes, let me draw it out. It is pretty small, but once you include the volume imbalance, it makes a little more sense here. Let's actually do black, and let's zoom in, showcase it, right? So right here, fair value gap, even if you use the top of this candle, you can see it is still a fair value gap. A little harder to notice, but you do have that volume imbalance added toward within it, which gives you a beautiful entry right after forming the breaker. As we know, as soon as we trade above this, you can now call this candle a breaker block, and you have a very beautiful entry right there. Took the one a bit above. Oh, this one? Yeah, I mean, this would be a valid continuation, to be fair. Well, if you guys remember the rules of my continuation model, you can't just enter on any random fair value gap after. You have to wait for the respect of the fair value gap and price to form a bullish order block. So your entry would be once we close above this. So continuation model entry would be here. Stops would be at that low. It would actually be a loss with the continuation model. Should have been in this trade right here. Right? You already expanded so much, so really being in this trade early is what you want to see that. But yes, just randomly clicking the button here, am I gonna, if a student would come to me and tell me, oh, well, I missed this one and I saw the next fair value gap 3 minutes later, so I just took it? Yes. This is the gap on MNQ. Yeah, sometimes those are hard. When I used to trade MNQ, I'm back on NQ, by the way. Now that the volatility has died down a little bit, right? I can get back to trading minis. But when I used to trade MNQ, I would just look at NQ and have a tiny little MNQ chart to execute because the liquidity is different there. And now you might want to say, okay, well, I'll trade the liquidity that is available on the chart I'm trading, right? No, because NQ drives it, and MNQ is weighted by NQ. So truly, I would really recommend you just look at NQ, trade NQ, but at the point of executing, then you use MNQ. It can be hard, but when you have a layout, for example, right? Of course, my layout is pretty extreme because I like to have it all on one chart. And I don't know how this is going to look. I'm going to full screen this. How does this look? Probably looks a little wide right now, or not really. It actually doesn't look so wide. But I have a 4K super wide screen, right? So let's say I had this on and I just have like this tiny little guy down here is MNQ. So now I can analyze on NQ, 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 ES here for my SMT. And then I can just go here and click the, for example, buy and sell buttons if you're just trading one account. Myself, I'm used to doing multiple screens because I have a VPS running and I have multiple different platforms to execute on. So, I mean, just a little recommendation on that part. But just to get back in this trade very quickly, where would be our objectives? Well, for me, this would be a retracement. As I said, with the current daily structure, I would frame longs as retracement. Of course, I didn't know before that it was going to be an insight day. If not, I would have definitely looked for an expansion, but that's why you hold runners, right? It's that simple. So first premium and efficiency of the range we're reversing, right? We have this 5-minute bearish fair value gap. And if we look right here, does it offer enough risk to reward? Yes, 2R right there. Imagine how relieved you are to take profit here after all that bullshit. And no, I did not trade this, guys. I took this short, went off to go to the gym early in the morning, and I took this short. If you guys were watching live, I pretty much called, not this short, I took a lower short, and I called, oh, okay, I'm going break even right here, and then I got stopped out 2 candles after. We'll talk about that right after. But if you were holding through this consolidation, you'd definitely be extremely happy to take your money here and to go break even at this point. And as you can see, holding a runner would have been definitely to your advantage. If you're asking me, where would I take profit? Definitely at this high right here, an important high. You have AM session high, which is right here. If we just bring this guy here, right, the 930 high pretty much aligns very nicely with the 4 standard deviations. So this would be a very nice cluster to look for take profit again. And then of course, current high of day, which got reached late afternoon, an hour before the end of regular trading hours. So definitely a very nice opportunity there. And if you were in this long, you would not have taken this short. That's the truth. I myself was not in this long, so I looked to take a short. There was a beautiful lunch trade, as you can see, bearish breaker block right here. And as soon as we formed the bearish breaker block, next candle retraced into this fair value gap and this inversion fair value gap, which was your entry. 3PD array stop loss rule, sadly, there's nothing other than these two, so you have to go all the way up to the order block. I mean, it was a great trade. Looking back, the only thing I should have seen is, hey, we're not done with the morning trend, I guess. So this was really more so of a, it's the end of the week, let's just take one last trade for the road, dumb setup. For me, pretty much, well, close to a break-even day initially, which got brought back to plus 2R with this little guy, and lost 0.5R, 0.5R, right, on this last guy. You know, when I take trades that are half risk, it's either a continuation model, which that's part of my rules, or it's me just wanting to click some buttons. And you know what? I've accepted that that's the cost of doing business. Sometimes I actually just want to click a button. And it's better to get it out of my system than to let that compound into one big blowing day, right? So it costs me probably 2 to 3R a month. Sometimes I just want to take the trade. Like today, this was a little bit rushed. I should have just been in this long, one trade and done for the day. This was a little bit aggressive. This was just, well, I should not have been in this trade because I should have been in this long, right? So a lot of things there. Short setup made me sweat while holding that long, not gonna lie. Yeah, it can be hard sometimes, but that's why just having a rule where you don't flip is just the easiest, right? I mean, we looked at it yesterday where we had a long setup and then we would have had a short setup. But if you were in that long, you would have just held on. Pretty much same thing as today, right? So you really have to follow the model because the model takes into consideration that you don't miss trades. Of course, we're humans. You're going to miss some. You're going to make some mistakes. That's why basically mechanical logic, there's always going to be a bot that's going to be better than you. That's the truth. But bringing your intuition towards it, sometimes you can get lucky as well and actually have a winning day when it should be a losing day. That's what we call variance. And to be honest, as long as your model is profitable enough, variance does not matter. That's why small trades like this don't really affect my psychology so much. I don't really mind anymore. Do we have any final questions? And no, I'm not going to talk about the short at 16:53 on a PM on a Friday end of day, right? I don't care what that happened. I don't care how. I wish it would have happened there so I could have made a little extra money, but it is what it is. We had to take current high of day right here. Honestly, the good performance for a day like this would have been to only take this long. This is the only setup I want to be taking. Now, if we're talking about valid setups, 1, 2, 3. All right. So we have our 3 valid setups, which would have led to win, huge win. You would have never been in there. I don't think I've ever heard you mention the win rate of the Rise model. Yeah, I'm very happy to, because it's very variable. That's the truth. Week to week, right? Monthly, it stables out. And I've found that a lot of my different students have different win rates with it. If you remember, I don't know if you watched it, Nico, hopefully you did, but in my model video that I did on YouTube, the Rise trading model using ICT concepts, right? I outlined 2 different approaches to the model. For example, trading every day, taking every single model, where your win rate is lower. Then you're going to be looking at a 40 to 55% win rate model. This is through years, right? So you're going to have some month where even if you're trading every day, you're going to have 80% win rate. You're going to have some months where you're trading every day, you have 30%, and you're ending the month like you're up 8R, right? Which is a bad month, by the way. But if you're trading it the conservative way, this is where it evens out a lot more. So month over month, you're going to have very consistent win rate of between what I've found, and this is data taken from students and taken from myself, from 65 to 85. I personally, on a trade win rate, have a 75% accuracy. I used to run a 90% average for a few months at the start of 2025 and the end of 2024. I was on a hell of a streak, super happy. But then with the volatility and everything, it actually brought this very much lower. But for me, I'm comfortable with anything 70% or above. And when students come to me, for example, I remember doing some intro calls probably a year ago now. I think my last class that I started was like a year and a half ago. But they were asking me like, okay, what can I expect? Well, I don't do expectations, but I do goals. A very achievable goal for anyone trading the Rise model is an average of 17R a month, and that's if you can maintain a 40% win rate. That is my, well, it's not opinion, it's data. Right? So if you trade it purely mechanically and you make a lot of mistakes, you should be able to make 17R a month with a 40% win rate. So I gave you a lot more detail than you asked by just asking for the win rate, but I wanted to make sure that I wasn't just telling you a random number and actually telling you what it was based on. That's the aggressive or conservative approach. That is with a conservative approach. The 40% takes into consideration that you make a lot of mistakes. So if you make mistakes, but you can manage to have a win rate of 40% with the Rise model, you'll make 17R a month. You guys can do the calculations about average R and average positions per month if you guys want, but those are the metrics, and that is based on it was the last 3 years. I should update it. It doesn't include the last probably 4 or 5 months of 2024. We're due for another I'm due for another just large backtesting session. I'm only taking 1 trade a day for like my entire trading career. Would you say it's better to up the frequency using the Rise model? Well, see, with the Rise model today, truth is, I took this short, stopped, but then I came back from the gym, had nothing to do, wanted to take a small dumbass trade. But if you had only 1 trade, you would have been up 2.51 R minimum. I held a runner up to here, and my final runner was like right here. So see, truth is, myself, when I start the day with a win, I stop trading. It's just that simple. My maximum trades are 3. I have 2 bullets and 1/2 risk trade. So 2 full risk, where I risk my entire risk. Currently on my personal account, that it goes between 1 and 2%, depending on my streak. Pretty much when I'm on a hot streak, I push my risk. So between 1 and 2%. And then the final bullet. So if I take a third trade that day, it's going to be half of my normal risk. So worst case scenario, let's say I'm risking 2% per trade. Worst case scenario, my worst losing day is 5%. Now, that's with extreme risk. Let's say you're risking 1%, then your maximum losing day is 2.5%. And for all you guys that are trading prop firms, it's very simple. I've always said you risk 0.5%, and that means that your last bullet is going to be 0.25%, so a quarter of a percent. Very straightforward stuff on that end. You want to allow for 8 trades is always what I allowed. So basically, the drawdown I am allowed, divide by 8, that's going to be my risk. And I don't do adjustable risk on challenges. But if you are down bad on your challenge and you don't have the money to buy another one, cut your risk. Always a pleasure, Nico. Hopefully that answered your question, Errol. But no, I don't believe that it would up your frequency to be trading the Rise model. It's just if you're limiting yourself to 1 trade a day, sometimes with the Rise model, your first setup is going to be a loss, and then the second setup is going to be a win. So what do you do in that case? Well, you just missed out on the win. As long as you follow a clear system and a clear set of rules, I'm not against frequency. I personally, as a trader, will never take more than 3 trades in a day. Unless I'm really pushing it. Like we've seen some crazy days in 2024, late 2024, when we were super, super bullish. I would just push through. I would keep scaling into positions. And I do regard those as separate trades. Just for note purposes. Was that of any help? Hopefully it was. Do we have any final questions before we call it a day? No, this was a smaller review, but we've talked quite a bit. So we're at 32 minutes. This is pretty much where I want to be for the longer reviews. And the shorter ones, I want to be 25 minutes. Awesome. All right. Well, you guys know, classic me. I'm going to tell you guys, take some time. Yes, I'm going to add this video for sure, NJ. You guys enjoy your weekends. Take some time off. Refresh. Get ready for the new trading week. You guys have a great weekend. We'll see each other on Sunday for a classic weekly outlook. Bye, guys. Have a great night.